Hey, Mayor, we are all set.
All right.
Just want to introduce, we have a new steno, Christine Marfio. So this is her first meeting that she's in. Christine, this is Mayor and all the representatives from the commission, okay?
Hi, Christine. Welcome. Okay, and Sherry, while we're doing a roll call, can you post the agenda, please? Can you share your screen and post the agenda? Or can anyone do it? If you can.
Hang on 1 second.
So, Sarah, do you have the agenda?
Yeah, I can find it.
Yeah. Sherry, can you just give Sarah sharing privileges?
Got it, Sarah? Okay,
Wonderful,
so-
thank you. Okay, so it is 12:09. We'll call the meeting to order. We'll do a roll call vote, please. Sherry?
Mayor Alorza,
Present.
Vice Chairman Lombardi,
Present.
Councilwoman Joanne Ryan is absent. Sarah Silveria,
Present.
Michael Costello,
Present.
David Hirsch is absent. David is absent, and John Winkleman is absent. We have 4 present and 3 absent. We do have a quorum.
Great, thank you, Sherry. I want to thank everybody for being here. Appreciate everyone's time. We'll jump right into the agenda. We'll go to matter number 1, investment performance analysis. Can you take this, Eric?
Yes, Mayor. Can I have a share screen, please, now, Sherry?
Sarah, you can drop the screen so Eric can get on. Okay, Eric, you're all set.
Thank you.
Welcome.
Everybody see the first page?
Yes.
Okay. Thank you, Mayor. As is normal, we'll start with our current investment position on an estimated basis. This is through March 19th. A lot has happened, of course, since our last meeting. Extremely volatile markets, both in fixed income and in equities, and really everywhere, especially commodities, due to 2 main drivers, of course, and that is a very hawkish shift in monetary policy by the Federal Reserve. Essentially, every time they speak, they become more hawkish and imply more Fed interest rate hikes, and the market has been reacting to that. Of course, in the last several weeks, the Russian invasion of Ukraine has also led to a great deal of volatility in all markets, equities, fixed income, currency, commodities, especially, and that has also affected the portfolio. But you can see, thankfully, in the last week or 10 days or so, markets have actually recovered very strongly, and from being quite a bit more negative to now actually positive in many cases month to date in the month of March, and you can see that through the 18th. So month to date, we've actually made 40 basis points at the portfolio level, bringing us down to about 4% or so year to date. The commentary would be, if you look at, say, your domestic equity, you'll see that the value growth story remains quite extreme this year. So if you look at year to date for our large cap value index fund, is actually up 20 basis points year to date. Our large cap growth index fund is down 10.9, call it 11% That's a very wide spread. So value outperforming, you'll see this as sort of truth really throughout the world, throughout domestic equity, for sure. And that is because of the sensitivity to interest rates. So interest rates have been rising rapidly. We'll talk about that a little bit more. And value tends to outperform in that area. That is, growth is more sensitive to changes in interest rates. It does better when interest rates are falling, other things the same, does worse when interest rates are going up, other things the same. And you can see that throughout the portfolio. Robeco, Boston Partners, our mid-cap value, also up year to date. That's up 40 basis points year to date. Small value is only down 90 basis points year to date, but you can see our mid-cap value ETF, Vanguard mid-cap value is down 12.9, call it 13%. And the Russell small cap 2000 growth is down 11.6. So this pattern repeats itself. We can see that internationally as well. Brandis is only down 3%. That's a value manager, international value manager. You see the index fund that we use, also the Fidelity Global ex-US index fund we use for international exposure is down 6%. There's a lot more growth in that index fund, for example, driving that. The real story this year we can see, as I've alluded to already, is in the fixed income category. You'll see that Loomis Sayles, our core bond manager, is down 4% year to date, as is our Vanguard Intermediate Term Treasury. That is also down 4% year to date. So interest rates have been rapidly rising in response to the Fed's shift, its hawkish shift. And of course, the cause of that hawkish shift is very high inflation. Prior to the Ukraine invasion by Russia, the year over year inflation rate for CPI was about 7.5%, very high, and the Fed made clear that it was going to have to take actions to address that inflation problem. Since the invasion of Ukraine and the huge impact on commodities prices around the world that is causing, expected inflation in the short run is going to be even higher. Most had thought that inflation would probably be peaking around now or over the next month or two and start to flatten out and fall over. That's not going to be the case now. You've seen what's happened to oil prices, gasoline prices, natural gas. The list goes on in commodities: aluminum, copper, wheat, nickel, palladium. Russia happens to be a very large producer of many commodities, including oil and natural gas. And so the official boycotts of them and the private boycotts, if you will, many companies and institutions are refusing to buy Russian produced commodities of any kind. Also, the Ukraine happens to be a very large producer of wheat. And so that's obviously going to be severely affected. Between Russia and Ukraine, for example, about 25% of the world's wheat is produced in those two countries. And that, of course, is being expected to be severely impacted by this problem. So two massive shocks that have imparted a great deal of volatility into global markets of all kinds. But very recently, at least, equities have recovered somewhat because at least the short run outlook for the US remains quite strong with respect to at least near-term GDP growth and near-term earnings growth. That remains quite strong. So you see that effect throughout the portfolio. We're also getting some help from our hedge funds as well, both up nicely year to date and hanging around zero or so on average, down only about 0.5% year to date as well. So I expect this to continue. I think we must expect continued swings, noticeable swings in both directions. Heaven forbid something even more tragic occurs in Ukraine, chemical weapons use or worse. or that the conflict spreads. Markets are worried about cyber attacks, for example, other things. The rest of Eastern Europe, the Baltics, Poland, it's quite tense right now. And that's why markets are behaving the way they are. But the structure of the portfolio being what it is protecting quite nicely so far, and doing about what I would have expected in this environment, both overall and with the underlying managers and or passive exposures. So take any questions, Mayor, that anyone may have in this area.
Mike?
Two questions, Eric. I know the state, because of the timing of this, of the Ukraine invasion, voted to remove any Russian holdings. Now, it was a very small piece of a international index fund. And, you know, you could argue it was more of a, there wasn't a lot of substance in the sense that, one, you can't even sell the equities if you had them, but it was trying to keep in the spirit with the sanctions that were being applied. Do you have any idea what exposure the city has to Russia?
Yes.
In terms of direct equities?
Yes, I can. So we had a couple of requests to look at that. We were doing it anyways, but as of the last data available, prior to the Russian markets shutting down, we looked through and we calculated the following. 3 managers had very small exposure to Russia. Your Brandis, the international equity manager, active manager, the Fidelity Global ex-US Index Institutional Index Fund also had a tiny exposure to Russia as an index fund, and the Vanguard Intermediate Term, the Vanguard Total International Bond Fund also had an exposure. The 3 exposures to Russia as a percent of the overall portfolio added to 0.07% of the portfolio, or 7 basis points of the portfolio, about half from Brandis and about half from the other 2 index funds. Now, the indexes that global index funds are measuring against are in the process of ejecting Russia from those index funds, as you alluded to earlier. So the managers are in the process of essentially writing down those positions to zero. I think they will probably try to sell them if and when the Russian markets are open, or open at least to foreign owners. Right now, today, for example, about 55 or 60 stocks are actually trading domestically in the Russian market. It just opened today, but foreign investors are not allowed to sell. Brandis, on the other hand, has 1 active position that was well less than 1% of its portfolio that it, of course, currently cannot sell at this time, but we can certainly instruct them to, as soon as they can, to divest of any Russian exposure that they may have now or in the future.
Yeah, I think it's probably best practices that as a board we vote that, you know, in keeping with the sanctions, that it's not appropriate for us to hold and certainly not buy any of these assets, and that in a timely manner we're out of all of them.
And Michael, just to chime in, so that's something that we were going to take up on discussion agenda item number 2, the discussion relative to the rebalancing and the reallocation. So I think that we can have that discussion and have the vote on that today.
Okay, that's fine.
I'm fully in agreement with your sentiments.
And then the second question has to do with the fixed income portion of the portfolio. maybe it's going to come up in the second agenda item, but just whether or not from a duration exposure that we currently have with our fixed income holdings, is that in keeping with what Wainwright is recommending, and are there any changes that we need to make to that?
You are anticipating the next section, and we have an asset allocation, rebalancing, and review to discuss in that section.
Okay, so I'll table that to the next. I have no further questions on the portfolio.
Okay. Any other questions or comments on agenda item number 1? Okay, if there are none, I'll entertain a motion to accept the investment performance analysis as just delivered by Eric. Is there a motion? Motion by Commissioner Costello. Is there a second?
Second.
Seconded by Commissioner Silvera. Any discussion on the motion? All those in favor, please say aye.
Aye.
Aye. Are there any opposed? Okay, the motion carries and the investment performance analysis is accepted. And pass it over to Eric once again for a discussion and or decision relative to the pension portfolio, asset allocation review, and or decision relative to rebalancing of the fund. Eric?
Okay, thank you, Mayor. As you can see, it is March, of course, and it is our practice to do an asset allocation review in March. And so we have provided that in this package today. The screen we have up shows our current target by asset class and our new recommendation for this year, at least going forward, for the board to consider. And as you can see, what we have done is, well, we've done a few things. We are recommending that we reduce our fixed income exposure in total from 26 to 24%. And we're doing that by recommending a reduction in 2 percentage points from U.S. investment grade bonds, which is managed by Loomis Sales, of course. And we're also recommending that within the fixed income component, we reduce our foreign bonds from 3 to 2%. To speak of duration, they tend to have the longest duration in our portfolio. Those are often up around 7 or 8 years. The Treasury duration tends to run around 5 years, Mr. Costello, and the index, which Loomis Sales manages against, the Bloomberg Barclays U.S. Intermediate Government Credit Index, tends to have about a 4-year, high 3s or 4-year duration. So our recommendation, which really is getting to the increased strength and funding of the pension portfolio by the city. The city, under the mayor's leadership, has made great strides in recent years and is fully funding the ARC, for example. And so with some growth in the portfolio and some strong returns in recent years, and in light of that, we believe the board could consider a slightly lower exposure to fixed income, a slightly higher exposure to equity. As you can see, we are increasing our recommended target from 66 to 68% equity, and those increases are spread throughout really the asset classes. Simultaneously, for the board to consider within those recommendations, which I could get to here in a moment, we are pulling exposure from our active managers and giving it over to the passive managers. So 2 things happening: decreasing fixed income a little bit, increasing equity a little bit, and simultaneously switching some exposure over to passive from active. That is what is contained within this page and this page here, page 17, which shows the actual dollars that would leave from or be added to the individual passive funds and active funds. So I'll stop there and take any questions with what I have described.
Eric, can you just tell me a little bit more, basically walk us through this page 17, and in particular, the shift from active to passive here on 17?
Yes, Mayor. So if you were to look down these columns, if you were to look, say, at the existing target weight column under the before rebalancing section and the new potential target weight, you'll see the individual weightings we are recommending for change. So we're recommending Vanguard Value, large cap value, go from an existing target of 9.75 up to 10.25. We're recommending that Russell 1000 growth, our large cap growth, go from 675 to 750. We're recommending Boston Partners go from 6 down to 5.5 in the mid cap value section. We're recommending that mid value ETF, which is Vanguard mid cap value passive exposure, go up from 3.5 to 4.5. Mid growth stays the same. Boston Partners, our active manager on the small value side, would be reduced. Its target would be reduced to 5.5 from 6. Russell small cap growth passive would go from 575 to 6. Brandis, our international active manager, which is a value manager, deep value manager, would be, its target would be reduced from 675 to 6.25. And the index fund on the international side, the Fidelity Global Fund, its target would be increased to 6.5 from 6. And then on the fixed income side, the change would be Loomis sales target would be reduced from 19 to 17. The Vanguard Intermediate Term Treasury ETF, which is of course a passive treasury exposure, would be increased from 4 to 5. And the International Bond Index Fund, passive fund, its target would be reduced to 2 from 3%. And those dollars in the next column reflect those moves towards the new target, should the board accept that.
Okay, got it. Thank you. Michael? You're muted, Michael. Yep.
Sorry. Eric, curious as to the non-US, the international equities basically stays the same. Curious if we had this meeting in January, pre-Ukraine situation, would you have suggested increasing that as part of this program?
Oh, increasing international equity exposure?
Correct. I mean, given the underperformance that internationals had over the last decade, was that a consideration for the increase?
Yes, we would. I think we did and would have considered perhaps a little bit more international, based on exactly what you're saying. And as you know, I know you're quite sophisticated in this area. The PE ratios of European exposure are much below US, European markets, etc. They have underperformed. Their PEs have not expanded like US exposure has, etc. There are some emerging markets inside of that international bond fund, equity fund, for example, that has also underperformed. It's been getting hit, of course, with Ukraine, as you correctly referred to. They've been hit even harder, and Europe has been hit harder. And that's, seems like just about anything could happen over there right now. So yes, I think you hit on something there. We may have maybe increased that by a small amount, but in this environment and going forward, given the totality of the situation, and our overall risk profile, at this point, we're recommending to keep it the same, but shifting to a little passive.
And I respect that. I would just kind of suggest that, you know, I think it's something that we should keep our eye on, because I think the Ukraine situation has caused quite a change in thinking. But, you know, Europe will probably go into a recession, or it's highly likely. And it wouldn't surprise me if the US follows and Europe will be coming out of the recession at some point sooner. And so, you know, a bit of a tactical shift at some point might be worthwhile. But I can't argue with your thinking at this point. Then the one other question to challenge you a bit is on the fixed income side.
Yes.
I definitely agree with lightening the exposure, and would just throw out whether there was any consideration of reducing foreign bonds to 0%, given, you know, the duration risk and the currency risk, and maybe even allocating that 2% to cash, you know, as a shorter term tactical decision.
Okay, so yes, this is more of a longer term allocation, or medium to longer term allocation recommendation. However, were the board to decide to be more tactical, you know, we clearly could go in that direction. I wouldn't have a major issue with even reducing that further. In the past, the board has essentially stuck to its target strategic asset allocation for the most part, but, you know, this is a very you know, highly unusual circumstance with war in Europe for the first time since the 1940s. So the board could consider that, and we wouldn't have a big problem with further reducing that. We did reduce it, as you can see, and as you noted. I guess I did not consider going all the way to 0 for this medium to longer term asset allocation, but your reasoning is sound in my view.
Well, you know, as you said, it is a pretty extraordinary period. I don't want to micromanage what you're doing, and I think it's dangerous for a committee like this to try to get overly tactical. So I defer to the group, but I think that this is a, you know, very unusual circumstance that we're in, and we do have a very high exposure to equities. We've already seen just how much the market can sell off, and still could likely sell off. So to have a little bit tactically in cash, you know, I think it's worthwhile. But
So let me chime in here in terms of process. So I think that, Eric, what you just heard is a suggestion from Mr. Costello, but from the commission, that if going down to 0 on foreign bonds is something that you recommend, that's something that, you know, we'd be willing to consider. You know, I defer to, you know, I defer to, or rather, I weigh very heavily, you know, the opinions of, you know, folks the professionals in this field. So there's already a significant decrease here. You know, Commissioner Costello mentions if you're recommending to go forward, that's something that you know, we're willing to consider. So that's point number one. The second is if a decision like this, it's more of a question if it has to be made now. You know, I certainly, you know, want to hear the case for going down to 0 from you, Eric. You know, why you think it makes sense. If you're prepared to make the case now, that's fine. If you need, you know, to make the case at the next meeting, you know, I'm also fine waiting for that next meeting. But I turn it back to you, Eric, that I think I speak for the commission that, you know, we're open to a case being made to go down to 0 in that space, and want to know whether that's something that you advise and whether that's something you want to take on right now.
Sure. So again, I think the reasoning is sound, Mayor. What we could consider and what we could, if you so chose, we could easily adapt our recommendation here, and you could vote on it if you so chose, as a shorter term tactical risk management or risk control issue. Given what's going on in Europe, what you could do is say, let us take Vanguard Total International Bond from 3 down to 0 at this time, and at a future meeting when the Ukraine situation, where there's some more certainty around that, you could vote to bring it back to its longer term potential target weight of 2%. So that would be very easy. It's a liquid fund. We could do it today, or by tomorrow that could be done easily. It's a daily liquidity. It's a daily traded fund. So that could be done. And then it could be up to a future decision of the board and in future meetings to return that cash to its 2% longer term target.
Yeah, I guess more of what I want to hear, Eric, is I appreciate that suggestion, but what I'd like to hear from you, Eric, is this something that you recommend or not recommend?
I want to make sure that I answer the question fully. If we are to do some short-term tactical trading, or adjustments, which we have been not done to any significant degree in the past, then I would say yes, let's do that for an intermediate, undetermined amount of time. I would recommend that. If the board wants to stick with its strategy of long-term strategic asset allocation, then I would say let's not. If I am given the choice of doing that, I would not have a problem with saying, well, let's temporarily take our 2% target to 0 and hold cash for a short amount of time. I say a short amount of time because cash is 0 essentially, or maybe 50 basis points at the most right now on return. And I don't think we would want to do that for the long run, but it would certainly be fine and acceptable to me, and something that I could recommend doing as a risk management tool here for the short term, given the great uncertainty of what's going on in Europe.
Okay. Any other questions or comments?
No, I appreciate the way you're presenting this, Mayor, and I agree with you that if we're to do this, it really needs to be endorsed or recommended by Wainwright, because to a minor degree they will own it. I think it's a good idea. Obviously, I brought it up, but I think from a process point of view, this is not something that I would suggest that we do often, and that, you know, future committees don't, you know, get their hands dirty in this all the time. But I think given the situation, if Wainwright endorsed it, I would vote in favor of doing that.
Okay. Eric, so how would this work? Let's say we were to authorize it. Is the idea to keep the allocation at 2%, but give you approval to temporarily go below that for strategic reasons? And so that's A, and then B, when would it be brought back up to 2%? Is that a question that comes back to the board, or is that something that we would delegate that judgment to you on the timing for?
Okay, so part one, we would suggest how to go forward. if this were to be implemented in some way, you could vote on the new target, the new target asset allocation, which is in front of you, and that would be adopted by vote as the new long-term strategic target. And then you could also simultaneously or as a separate vote say temporarily we would like to have that 2% exposure, which would be in international bonds, be zero. And at a future meeting, as recommended by Wainwright, the board could consider reallocating towards its target. And you would have another vote in the future to go back to to put that cash back to your target with some more certainty in the Ukraine situation.
Realistically, in terms of timeline, what are we talking about in terms of going back up to 2% if we went down to zero? Are we talking about a month or two? Or are we talking about a year or two?
I think either of those could be possible, Mayor. It really would be a function of what happens in the Ukraine war. Does it spread wider? Does it go on forever or long term? Is there some clarity or peace talks that begin in the next weeks or months? I think it could be possible that it could be 1 month or as many as several quarters.
Yeah. Mike, can I ask for your advice on this? If we were to vote to bring it down, is it something that we should delegate to Eric's judgment on when to bring up to 2, or is that something that should be brought before the board?
I think it's reasonable. We're not talking about a big number. I defer also to the other legal and financial minds in terms of what is proper in terms of how we're trying to achieve this. But I think giving Eric the discretion to do that is certainly fine by me. Allowing a little bit of timing in there, and certainly wouldn't bother me if a month from now he came back and we had that 2% in cash. I know 0.5% is nothing to get excited about, but it's pretty attractive when you're minus 4% on your bonds, and you're not going to lose any money in cash.
Right. Okay. So what I'm hearing is that this is a suggestion that Eric endorses and would recommend that we approve the allocation at 2%, and in addition, give discretion to Eric to bring that 2% all the way down to 0 if he so chooses, with that money being moved to cash, and also giving Eric the discretion on when to bring that cash back into the foreign bond exposure for up to 2%. Does that capture it, Eric?
I think so. I think that's fine with me, and I think that jives with what Mr. Costello was saying.
Okay. Any other one of the commissioners want to chime in on this point? Okay. So that's fine. That makes sense. I got that. And before we take up that vote, I want to know if there are any other either asset allocation or rebalancing questions or issues to raise. The one other thing, if there are no others, the one other thing is the exposure to Russia. And I know that we've discussed this previously. As part of the rebalancing, I also want for us to decide on divesting from Russian exposure. Eric, can you walk us through, what that would? Can you walk us through what that would look like and what kind of direction you would need from us to make that happen?
Sure. So I think what the board could do is vote for for the portfolio to be divested from Russian exposure in a time period, in an appropriate time period, well, in a possible time period, for the managers, the index funds, and the active manager to comply with that. So what I would suggest is there is a vote to divest Russian exposure across the portfolio to the extent possible and in the shortest time period possible, which will of course require that those managers can get out, can sell.
I will make that motion.
Okay,
Second it.
Yep,
Okay.
Mr. Lombardi seconded it.
okay, seconded by Mr. Lombardi. All right, so it is a motion to authorize Wainwright to divest from Russian exposure at the earliest possible time. Does earliest possible time capture it, or do you need different language on that, Eric?
I think that's reasonable language, Mayor.
Or how about the earliest reasonable time?
That's fine.
Okay. Okay, we have a motion and a second to divest from the Russian exposure at the earliest reasonable time. Any more discussion on that motion? All those in favor, please say aye.
Aye.
Are there any opposed? Okay, great. Thank you, everyone, for that. So back to the asset allocation and rebalancing question. So the first thing is I will ask Commissioner Lombardi if he will make a motion to enter pages 17 and 18 of our packet in as Exhibit A. Is there a motion, Commissioner?
I'll make that motion, Mayor. Thank you.
Is there a second?
Second.
Okay. Any discussion? All those in favor, please say aye.
Aye.
Are there any opposed? Okay, so pages 17 and 18 are now Exhibit A. At this point, I'll entertain a motion to reallocate and rebalance our assets as detailed in Exhibit A. So we'll do this, we'll do that one, and then we'll take the other motion separately. Any motion to that? Is there a motion to that effect?
I'll make the motion, Mayor.
All right, motion made by Commissioner Lombardi. Is there a second?
Second.
Seconded by Commissioner Silveria. Any discussion? All those in favor, please say,
Roll call vote, because we're allocating, rebalancing
Okay.
and allocating. Can I have a roll call, please?
okay, we'll do a roll call.
Mayor Laws,
Aye.
Lombardi,
Aye.
Ryan is absent. Ms. Silveria,
Aye.
Costello,
Aye.
Hirsch is absent. Mr. Winkleman is absent. Passes.
Okay, and then at this point, I'll so thank you, everyone. The motion carries. At this point, I'll entertain a motion to authorize Wainwright to reduce foreign bond exposure from 2% all the way down to 0, and to increase foreign bond exposure back up to 0 at his discretion. Mike, does that capture the
It
motion?
does.
Okay.
Yeah, I will.
So
Yes.
Commissioner Costello makes a motion. Is there a second?
I'll second it, Mayor.
Seconded by Commissioner Lombardi. Any discussion? Okay, and Sherry, do we need a roll call on this?
Please, let's do it. Just, yeah, please.
Okay,
Mayor Laws,
aye.
Vice Chairman Lombardi,
Aye.
Ryan is absent. Ms. Silveria,
Aye.
Costello,
Aye.
Hirsch is absent. Mr. Winkleman is absent. All present, 3 absent, it passes.
Great, thank you, everyone. Thank you, everyone. All right, we'll move on to matter number 3, discussion relative to Dexter donation fund and other trust accounts. Eric?
Mayor. I will open the other. Can everyone see the next package?
Yeah, we see it.
Okay, good. We're moving on to the other smaller trust accounts. I've opened it up to page 1. It shows what the Dexter Donation Trust has done. It is up 60 basis points month to date, down 5.9 year to date. Again, different from the pension plan because it has more equity, less fixed income, and no alternatives. So everything that I have said previously would apply with respect to volatility and what's happening with markets here. And I'll open it up to questions at this time with respect to all the other portfolios where you just scroll through, you would see are acting virtually identical.
Any questions or comments for Eric? Okay, if there are none, I'll entertain a motion to accept the analysis is just presented for the Dexter donation funds. Is there a motion?
So moved.
Moved by Commissioner Costello. Is there a second?
Second.
Seconded by Commissioner Silveria. Any discussion? All those in favor, please say aye.
Aye.
Yeah. Are there any opposed? Okay. The analysis is approved. Thank you, Eric. We'll move on to matter number 4. Request from Superintendent Javier Montañez to transfer $40,000 from the Henwood Inquiry Bradford Fund to the Providence Promise Program. And we have a letter in our packet.
Eric, you can drop your screen.
Yes.
Mayor,
Yes.
I would just like to, this item actually requires no action today. This was on the December agenda and approved by the board at that time. So this item can be removed from the agenda going forward.
Wonderful. Perfect. Okay, we'll move on to matter number 5, and I believe there are no matters pending for litigation to discuss. I'll entertain a motion to continue this to for our next meeting. Is there a motion?
Sarah, excuse me. So item number 4 was from the last meeting that got continued.
It was actually in the December meeting. It wasn't in January. So I think this was added to the agenda, submitted for the agenda in error.
Oh, okay. That was from we got this at the last meeting, so I didn't know it shouldn't have been on because no. Okay. Can we just have a motion to withdraw that from the agenda, just so we have a motion that is coming off?
I'll make that motion.
Second.
Okay, any discussion? All in favor, please say aye.
I have a second, please.
Seconded by Costello. Okay, all in favor, please say aye.
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 All right, any against? Okay, the motion carries. All right, move on to matter number 5, discussion relative to claims and litigation. I'll entertain a motion to continue that for our next meeting. Is there a motion?
Make that motion.
Thank you, Commissioner Lombardi. Is there a second?
Second.
Seconded by Commissioner Costello. All those in favor, please say aye.
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 Are there any opposed? Okay, that matter is continued. And it is 12:57. We are hereby adjourned. Thank you, everyone. I appreciate your time, and especially working through the complicated considerations that we took up today. So thank you, everyone. I'll see you soon.
Could I just have a motion to adjourn, please?
Motion to adjourn.
Motion to adjourn. Second. All those in favor?
Aye.
Aye.
Any opposed? All right, we are adjourned. Thank you, everyone.
Good day.
Thank you.
Thank you.
Thank you all.
Thank you.
Well,